Welcome back to Chairman's Briefing. I'm Rachel Lee, and as usual, let's go. Donald Trump is the second man in U.S. history after the 22nd and 24th President Grover Cleveland to serve 2 non-consecutive terms as president. In the wake of Trump's stunning political comeback, gold rediscovered the savage pull of gravity, its price blowing through key technical support as the safe haven trade begins to unwind. Let's break down gold's situation after Trump's win. In the short term, we're seeing modest support from 2 key factors: a weaker dollar making gold more attractive globally, and the Fed's path to cutting rates pointing to lower rates through 2025. But here's where it gets interesting. The long-term picture shows competing forces at work as Trump's economic policies present a double-edged sword. While his America First agenda typically weakens the dollar, supporting gold, his trade policies could spark inflation. A senior analyst at Active Trades, Ricardo Evangelista, warns that this might force the Fed to keep rates higher than expected, potentially hurting gold's appeal. Also, the market is split on timing. UBS sees gold hitting $2,900 within a year, betting on rate cuts and a slowing economy. But near-term traders are watching closer levels, 2,666 and 2,697 needed to break for immediate upside, while 2,604 marks crucial support. Bonds are getting hammered, and gold bug Peter Schiff has a theory why. He's pointing to a perfect storm: bigger budget deficits, inflation fears, and fewer rate cuts than Wall Street had hoped for. His prediction is that the Fed will have to jump back into the market with more money printing, which could send inflation through the roof. Solomon Global's Matthew Jones is watching Trump's return and what those America First trade policies might mean for precious metals. His take is that trade wars can actually shock markets faster than real wars. If Trump's tariffs come back and deficits keep growing, we could see the dollar take some hits. And guess where investors might run for cover? You got it, gold. We don't usually talk about Bitcoin on this show, but the tear that Trump sent it on is grabbing everyone's attention. LMAX Group's Joel Kruger breaks it down like this. Trump's crypto-friendly campaign promises have market participants buzzing, and they'll be looking for follow-through during his term in office. But the real kicker is that Kruger thinks we're just getting started. His prediction is that the dollar's about to hit a ceiling as rate cuts come back into focus. With central banks likely keeping the money taps open, he's seeing crypto gearing up for a major rally through the end of the year. Trump's promising to reshape America's energy landscape. His direct threat to climate policies that encourage the sale of EVs is being felt in a number of commodities that are sensitive to global energy transition initiatives. But even with him back in the White House, the renewable energy boom might be unstoppable. Why? Well, it all comes down to money and math. That massive clean energy law that Biden signed is pumping billions into red states through new solar factories, wind farms, and jobs. And this is the kicker. Getting rid of these benefits would need votes from the very Republicans whose states are cashing it in. As one expert put it, the economic benefits have been so heavy in red states, it's hard to see an administration come in that says that, we don't like this. Sure, Trump could slow things down around the edges, like maybe limiting offshore wind or adjusting some agency budgets. But with renewable energy now the fastest growing power source in America and costs dropping every year, the train might have already left the station. Kinross just dropped their Q3 numbers, and there's a lot for investors to like. Let's break down what matters most. Their margins have jumped to $1,501 per ounce. And here's what's impressive. They're outpacing the rise in gold prices, demonstrating operational efficiency. The company turned this into a record $415 million in free cash flow, and they're putting that money to work, paying down $350 million in debt. What's really catching investors' attention is their new Manh Choh mine, which just poured its first gold. Combined with their promising Great Bear project showing potential for 500,000 ounces yearly at about $800 per ounce costs, Kinross is setting up for a good rest of the year. Barrick Gold's third quarter tells a layered story. Despite gold hitting record highs, the mining giant posted earnings of 30 cents per share, a penny below estimates, while revenue dropped to $3.37 billion, missing targets by about $90 million. But look beneath the surface. Barrick's continuing its $1 billion share buyback program, adding another 4.7 million shares this quarter. They're also maintaining their 10-cent dividend, signaling confidence in their cash position. The company's CFO points to their balance sheet strength and world-class assets. However, the market's response was muted, with shares dipping 1% on the news. Entrée Resources dropped drill results from their Hugo North extension deposit on the Oyu Tolgoi property in Mongolia, and their numbers are turning heads. Let's highlight why this matters. We're looking at intercepts like 448 meters of 1.62% copper equivalent, and for those who are new to mining, that's the kind of grade that makes geologists smile. Even better, within that zone, they hit 172 meters at nearly 2%. From underground drilling, they're seeing similar impressive numbers, including a standout hit of 138 meters at 2.37%. Entrée's CEO, Stephen Scott, puts it like this: Hugo North is shaping up to be one of the best copper-gold discoveries in half a century. Oyu Tolgoi began producing in March of last year and is projected to rank among the largest copper mines globally by 2030 once all components are in full production. Let's analyze Hudbay's plans for the Arizona Copper World project. The company's aiming to become a major U.S. copper producer with some significant numbers on the table. $1.3 billion in capital costs for an expected 85,000 tons of copper annually over 20 years. Now, the project has some clear advantages. It's in mining-friendly Arizona with good infrastructure, and their timing aligns with growing copper demand from green energy and tech sectors. Key permits are moving forward with construction decisions targeted for 2026. But investors should watch a few things. While the grades are promising at 0.54% copper, they'll need substantial financing to reach production. Their strategy of producing copper cathode on site could reduce costs, but it's worth noting that mining projects often face timeline and budget challenges during development. What sets Hudbay apart from other companies telling a similar story, though, is its strategic position in a solid operating base of 3 long-life producing mines in Tier 1 jurisdictions. Not to mention a robust project pipeline in the Americas, according to CEO Peter Kielski. In his words, our portfolio generates the highest increase in net asset value with rising copper prices amongst our peers as a result of our unique copper growth pipeline. Next, let's break down some drill results from the Dolly Varden's Homestake silver deposit in BC's Golden Triangle. The standout hit shows 8.85 grams per ton gold over 48 meters, including a remarkable section of 701 grams per ton gold over half a meter. Another hole delivered 4.64 grams gold over 100 meters. For perspective, anything above 5 grams per ton in these kinds of deposits is typically considered high grade. What matters here is location. They're filling a gap between previous drilling, suggesting continuity of mineralization. With 23 more holes still waiting for results and the deposit remaining open, there's more news flow up ahead. The U.S. Securities and Exchange Commission is looking into whether Freeport-McMoRan failed to disclose threats a severe earthquake could pose to its new $3.7 billion copper smelter complex in Indonesia. A former contractor turned whistleblower alleges that the facility, which is built on reclaimed land, could face catastrophic failure during a major tremor. The story gets even more complicated. Multiple engineering reviews produced conflicting conclusions about the site's safety. Freeport stands firm, stating that designs meet all Indonesian building codes. But with the facility representing a crucial link to one of the world's largest copper reserves, this investigation adds a layer of uncertainty to global copper supply. A critical battle is unfolding in Nevada that highlights the tension between green energy goals and environmental protection. Environmental groups have just sued to block Ioneer's lithium mine, the first such project approved under the Biden administration. The math here is significant. The mine could power 370,000 EVs annually and has already secured major backing, including a $700 million government loan and Ford as a customer. However, critics argue that it threatens the survival of a rare wildflower and could impact local water resources. This case spotlights a broader challenge, balancing America's push for domestic battery metals against environmental concerns. With construction planned for next year and production targeted for 2028, the court's decision could reshape the U.S. lithium landscape. And that's a wrap for today. If you've made it this far, hit the subscribe button and maybe leave us a thought or two on what you thought of this segment. Thanks for being a part of Chairman's Every Week. We'll see you next time.